In the storm-laden theater of global markets, a dramatic shift is unfolding. The giants of artificial intelligence, those once celebrated as the unassailable champions of the tech era, are now trembling on uncertain ground. And in the eye of this financial tempest, one seasoned Wall Street veteran sounds the alarm. After 50 years navigating market turbulence, data analytics expert Mark Chen offers a sobering revelation: the worst may yet lie ahead. For those who believe the AI wave had only just begun, think again. Some of the sector's brightest stars are now its most vulnerable prey. And the reckoning? It's only just begun. From Nvidia's fall from grace to Oracle's quiet collapse, tech stocks are being battered by a perfect storm of rising interest rates, geopolitical uncertainty, and evaporating liquidity. But amidst the wreckage, there are survivors. Not just survivors, but potential legends in the making. In this video, we uncover not only the ticking time bombs you must avoid, but also the lesser-known power plays quietly defying the downturn. Our journey begins with Nvidia, a name once synonymous with AI dominance. Now, the winds have turned. Its crown as the king of semiconductors may have slipped. Declining demand, stalled data center projects, and rising competition from China all threaten its reign. Meanwhile, Oracle, another Goliath of the digital world, faces a downward spiral. Its stock, once riding high at 190, now languishes around 120. With falling earnings and downgrades from analysts, this is no time to play hero. Then there's C3.ai. The name itself sounds promising, its ticker, simply AI. But don't be deceived by the branding. The company continues to post losses and fails to capitalize on the AI momentum. It's down from 45 to 20, and further descent seems inevitable. So what should the smart investor do? Chen doesn't just forecast doom. He illuminates a path forward. A select handful of companies, quietly resilient, fundamentally sound, stand as beacons of hope. First, Palantir. Long dismissed by mainstream analysts, it now emerges as a fortress of opportunity. Its ties to defense contracts, including a recent deal with NATO, signal strength in uncertain times. While others retreat, Palantir advances. Its recent pullback was not a collapse, but an invitation, one Chen and his team seized, re-entering the stock around 72. Now trading near 95, its trajectory looks promising. Then, Viva Systems. A name that rarely graces headlines, but within biotech circles, its reputation is gold. Specializing in cloud infrastructure for medical research, Viva sits at the intersection of AI and healthcare, two megatrends converging into a singular force of innovation. Unlike so many others, Viva hasn't collapsed. It trades within a disciplined range. It's a stock that knows its place, resilient, reliable, ready. It's not speculative hype, it's grounded potential. But perhaps the most surprising recommendation isn't tech at all. Enter Dollar General. Yes, Dollar General. As tariffs rise and consumer wallets tighten, this unassuming retail chain could quietly surge. The chart is beautiful. The fundamentals are strong. When the world zigs, sometimes the greatest investors zag. And what of the remaining titans of tech? The so-called Magnificent Seven? Chen sees a mixed bag. Tesla is teetering. European and Canadian boycotts, faltering California sales, it's an empire under pressure. Even Elon Musk can't tweet away the storm this time. Yet Amazon, Microsoft, and Alphabet still gleam with potential. Their earnings engines roar, their balance sheets remain formidable. And Apple? Protected by a political carve-out, it's poised to survive any China skirmish. Still, Chen urges caution. These are no longer the hypergrowth darlings they once were. To find the next Nvidia, one must look beyond them, toward the next generation. And so we arrive at Chen's final pick, Fortinet. A fortress in the world of cybersecurity. While tech crumbles, Fortinet holds firm. Analysts raise their targets. Earnings impress. It trades in a stable range, supported by solid money flow. And best of all, criminals don't respect recessions. Chen's view is clear: the AI bubble may be bursting, but the future still belongs to technology, just not the same names you're used to. Investors must shift their gaze. This is not the moment for reckless buying. It is a time for discipline, for strategy, for waiting until the market comes to you. History shows us, major market corrections rarely form a single bottom. It's not a V. It's a W. We bounce. We fall again. Only then do we rise for real. Chen believes the second leg of the W is yet to come. And when it does, it will offer the patient investor a chance to strike, not in panic, but in power. As Warren Buffett once said, be greedy when others are fearful. But more importantly, know why they're fearful. Because when fear is driven by uncertainty, not catastrophe, opportunity lurks just beneath the chaos. Have your watch list. Know your levels. And wait. The train will not leave without you. It may seem like winter in the markets, but spring always comes. And when it does, those who kept their heads while others lost theirs will stand at the front of the next bull run. So remember these names: Palantir, Viva Systems, Fortinet. And remember the ones to run from: Oracle, C3.ai, even, for now, Nvidia. Because in this high-stakes game of capital and conviction, what you don't buy is just as vital as what you do. Fortune, after all, favors the prepared. And in a world where AI is both the promise and the peril, the future belongs to those who see beyond the noise.